Hello, Mark Sturdy here again with highlights or a summary of our detailed technical analysis in three timeframes of these major world markets of currencies, stocks, and bonds. And if we turn to the summary, we'll see that there is a really unusual situation in that none of these markets have the long term, the medium term, and the short term all pushing in the same direction from a purely technical point of view. And there's a reason for this, that there have been, particularly in stocks and currencies and bonds, an established long-term trend in recent months. But that has, for the moment, come to an end, and there are retracements of those strong long-term trends. And the question that arises for traders and investors is the retracement, a testing of the long-term trend, and possibly breaking of the long-term trend, or is it just simply a normal retracement inside the long-term trend? This gives rise to great certainty and particular interest on levels that guide us as to whether the trend has broken down or not. Take, for example, the dollar euro. Here we have the important and well-established long-term trend of a strengthening dollar that broke down through these prior lows and broke this diagonal going back into the 1980s. And then the fierce retracement back up there. You can see that green line. Now we can see what is the nature of this retracement. We can see that it is running into trouble. It's running into resistance from these prior lows, the very lows that established the breakdown, 103.39, 123 horizontals, and of course, finally, it would, if it continued on higher, it would run into the diagonal resistance. What is it likely to? We think it is going to test higher, because in the medium-term chart, we see this low here, 103.48, where the market failed before, having broken the, of course, this shorter-term diagonal, medium-term diagonal. It looks as if it's closed above that twice, and it wants to push on higher. So there's a great deal of uncertainty as to what's happening here, and we prefer to stand back. Look again then at the dollar yen. Here's the established, very exciting long-term trend of a weakening yen, strengthening dollar, and here's the fierce retracement. Great uncertainty. Is the retracement going to do more than it already has? We think it is. Looking at the medium-term chart, this support at 139.39 looks to me to be broken, just as the support for the dollar, the resistance to the strengthening of the euro has been broken. These retracements want to go further. There's great uncertainty as to how far they're going to go, hence we stand back. Turning to the stocks, the pullback since the beginning of 2022 in stock markets is well illustrated here. The question is, now we have some rallies underway, how far are these rallies going to go? The pullback through the prior low was the signal that there was some sort of question mark over the bears, the bearish case, but nonetheless for that we've fallen into this range beneath the bear trend resistance. That doesn't tell us very much, but it certainly suggested that there was a question mark over the bearishness insofar as it closed beneath and then traded back above. Short term, we think it's quite possible this goes further. It's broken back through 3900 where it failed before, and has bounced off it, so suggesting the short-term rally might continue, but as to how far, not at all clear. Hence, we stand back. We think the Euro Stoxx 50 is useful for analysts of these stock indexes because the speed of the rally has been dramatic. Of course, the bearishness of the breakdown was very important, but now the speed of the rallies seems to be attempting to negate this. Of course, the critical point has to be at the month end that establishes the close. So there's some uncertainty as to where it's going to close here. But turning to the medium term, we can see that the market has a lot more to do to convince the bulls, in my view, technically. There's a trading range here which is barely broken out of, and there's resistance above 3995, which would have to break for the bulls to have any credibility, it seems to me. So there's the level to watch, and a conveniently precise level in the Euro Stoxx, and similarly there's a level to watch in the FTSE. Here's the rally in the FTSE, actually much within a trading range, nothing very remarkable there. But were it to break through these prior highs, 75.68 and 75.80, that would be a good and important signal, I think, that the market has legs and wants to go higher. Bonds, well, the issue there is, if we just return to the summary, of course, yields have been and remain either have risen or and maybe are running out of steam, and this short-term bearishness. Look at the US note, for example. Here's the massive rally in yields, and the red line is the pullback. How far can it pull back? Well, it hasn't even broken the first resistance yet, the first support yet, so that we wouldn't be very excited on the bear attack unless 349 was broken. And the scope to go, yields to go lower before even that's tested. And this suggests to me that it might yet go lower. Here's a nice clear bottom formation, shoulder, complex head, double head, shoulder. Looks to me as if it wants to push higher up to 118, which might coincide more or less with 349. If and when it tests 349, then we have decisions to make, and we need to watch very carefully. But for the moment, the retracement, I think, wants to go higher, and whether or not that threatens the overall rise in yields in terms of trend integrity, we'll see, remains to be seen. Look at the gilt. The gilt yields rose dramatically fast, but seem to have failed to either break this diagonal trendline resistance from the early 80s, or in monthly terms, or the traded above. But it looks as if it's going to close beneath this band of resistance from prior lows that the market failed at before, around 4%. How much further can it come back? Well, a little bit further. It's now just above 3. I think we need to watch and see how it performs around 374. Once again, stand back and see how it performs. Commodities, they're a slightly different kettle of fish. The oil is in a big, as we've seen before, a long-term trading range between 115 or so and 40 or 30, around $30. If we go more closely, though, there's something interesting going on here. A break beneath 76.72, I think, would be very bearish. This is the continuation chart, which suggests that's already potentially breaking down. This, using the March futures, rather more to go. So conservative investors and traders will be looking for 71.58 to be broken before bearishness sets in the crude. More aggressive sellers will want to get involved right at the end of this week in terms of the continuation chart. Gold is interesting, fascinating one actually. Here we have the gold market. We thought this for a long time, this might turn into a very, very bearish double top, but there's been a fierce rally. Here's the nature of the rally. This was the completion level of the double top in the deck weekly continuation chart. Closed several times, bounced up, closed again low, but then we've had this dramatic rise. What's going on there? We think this is potentially a double bottom, and this is potentially, hence dotted, a head and shoulders reversal. So we're looking very carefully at, in the medium term, for a further reaction to the failure of this with a break up through 1790, which would complete this head and shoulders reversal, which would be quite exciting on the bull tack. Worth referring to the February contract as opposed to the continuation weekly thing, and this is the weekly February chart. Here's the double bottom, already looking solid. Completed, came back, tested the completion level 1751 and bounced off it. There would be additional confirmation if it broke 1818 in the February future, but for the moment, excited bulls will already want to start getting long, it seems to me, with stops beneath 1751. More cautious will wait for a break of 1818. And there's the detail in the day chart. So, no firm views, but lots to consider and lots to wait, and clear levels to watch for the next interesting signal. Thanks very much.